But let's bring in Professor Siegel, as we mentioned earlier, Wharton School of Business Finance professor. Great to see you, Professor Siegel. I was reading some of your notes. You said that you welcome the rotation. I guess you were meaning the rotation that has been dominant year to date, i.e. value over growth, as opposed to the sort of bounce back intraday of growth over value.
Yeah, I mean, that's quite a turnaround. I don't think the rotation is over. I believe value will outperform growth. And don't forget, really, you have two tiers on growth. As Mike said, I mean, most of the NASDAQ is not unreasonable. It was just there's a number of those stocks that are selling not at 100 times earnings, 100 times projected revenues. They're the ones that are hurt as much, and I don't think their reaction is over. But nonetheless, I still think the reopening trade is going to be the winning trade this year. I still think there's tremendous support for the stock market, and it's still going to be going higher from this point.
If, Professor Siegel, we do see inflation surprise significantly to the upside either tomorrow or in the months ahead, do you think stocks will correct, and do you think that would be a buying opportunity or a legitimate correction?
Well, I think if they correct, I would be buying opportunity. Don't forget, stocks are claims on real assets. And firms are having no trouble passing on these extra costs they're getting onto the consumer. Look what's happening to profit margins. We may get the highest profit margins in history, the highest beats versus expectations in history. So I'm only worried when the Fed really going to tighten, and it could be at the end of the year. I mean, I listened to Stan earlier on the program. He said he'd be out of the market at the end of the year, and I was sort of wondering, well, it depends on where this market is. I mean, if the stock market's up another 30%, I think I might be really shading down on stocks. If it is where it is today, I'd still be in it. So I still think there's a good deal to go. I'm not worried about early inflation. I'm worried later inflation, the Fed tightening, but we could be much higher by that point.
So what does it mean ultimately, Professor Siegel, for growth stocks? I mean, if you look at the past decade, it's been dominated by themes like online shopping and cloud computing and digital everything services. Yes. And that's been the place to be in an era of low interest rates. So what happens next? Is that trade over?
Well, I think it will trade over. You also have to remember that really interest rates after inflation are the most important consideration. So I don't think I'm going to be too worried. The Fed raises to 2% if inflation is 5%. That's still, free money to individuals. So it has to go up more, and that's usually at the very end of the tightening stage of the Fed, not in those early years of tightening. So I don't think the challenge is earlier, although the mindset is as soon as the Fed begins to taper, there will be a ripple in the market, to be sure. But the real bite won't come until they really stop inflation. That might not be till 2022, maybe even later that year.
What's the 3 to 5 year view for U.S. equities, Professor Siegel? Is this a screaming buy, or do people have to be nimble with the months ahead?
Well, I think it's a buy this year. I think we've got another 10, 15, 20%. And then I think we're going to be into a lower return regime. And I think people are going to be looking for value for dividends because fixed income is just not going to keep up with inflation. History has shown, all the research has shown that dividends on stocks do keep up with inflation. And that's another reason why I think the value trade will be a good trade in 2021.
Shepard Smith here. Thanks for watching CNBC on YouTube.